Well, I own the poor man's NVIDIA, Tom, and that's Broadcom. And that's been a workhorse. And
so that's the secret, is buy the poor man's whatever.
Yeah. And then Oracle, the poor man's hyperscaler. So we're focused on dividend growth in that portfolio. We have a growth portfolio that owns all the darlings like NVIDIA, Palantir, blah, blah. But this strategy is a workhorse. And it's over the last 10 years, it's just kind of 13.5% annualized with 3 bear markets. So I learned it from the great Tony Spare when Art Laffer owned a piece of our company, and we just focus on valuation, and then we do the work, the research.
You mentioned Oracle today, a big day for Oracle announcing earnings after the bell. What are you looking for there? We were talking earlier just about the need for cloud computing because of AI. Lisa giving us a brief on a Dutch company that's doing business now with Microsoft. What does Oracle have to prove when it has that call today?
They need to continue the sales growth
trajectory,
hitting the numbers. Yeah, and they have a huge backlog, but the company is pretty spotty on hitting their numbers. So if we get a sell-off, we've been trimming it back because it's become a huge part of our portfolio. If we get a sell-off, we may step back in. But you know, it's the company that everyone loves to hate, and the CEO, or now the chairman, that everyone loves to hate. He lives where I live, up in Lake Tahoe, and he's something else. Second wealthiest man in the world.
Nancy's doing it right, Tom. Between this portfolio and the Tahoe residence, I feel like we could.
Continue, David.
You mentioned the history, the bear markets that we've had. Here we are in this bull market, and I wonder sort of where you think we are in that as you survey this market today, as we note day in and day out the records that we keep coming close to or hitting. Your sense of how long that's likely to continue, and the indicators that you're looking to that will give you some sense of that.
Yeah, so David, I've drawn the analogy to the 90s when I was not just alive, but I was managing portfolios. And there are a lot of similarities. We had high inflation, 3%. We had a higher 10-year at 7 to 8, and the Fed funds rate 5 to 6. So what we know is when productivity is driving growth, you can sustain robust stock price performance for some time. We're just young in this new bull market. The 90s had 120-month expansion with over 400%. But what's important to me is that we saw better than expected revenue last quarter. So the earnings were great, beat estimates, but revenue beat estimates. And then we're seeing cash flow, free cash flow at corporations at $4 trillion. That's a historic high. Margins at historic highs. And then we've got the tailwind of the one big, beautiful bill. We call it the Obubba bill at Laffer Tengler because I feel dumb calling it the one big beautiful. But the tailwinds are huge for corporate cash flow, tax savings, cash.